Trade management. In this video, I just want to discuss how we manage a trade as it's in place. And we do have one as I'm creating this video where I'm long the 1685 puts on the S&P. So we came up to the level, we put a formation in place which enabled us to execute this buy in here. So I'm long the puts and I'm up a little over $1 on the contract. But I do expect, just like we saw with this move to the downside, we have support here between 1686 and 1682, which represents the target for the trade. But I do expect that we might have just a little bit of a challenge in here, just like we did in this move coming down here. So how we manage the trade is this. If I see a formation in here, and if I see some institutional activity come in here to want to force this market up to the upside, we could expect to see a little bit of a move up here, something such as like this up to 98. That would be a reasonable retracement of this move to the downside, and then look for a continuance back down into support here. So this is where we could begin to see something like that. If we do, we can hedge our position by putting on an option, by putting on a future, I don't like the futures much anymore, but it is a way in which I can get neutral between here and here. And so that's something that we could do short term. We really need to see a little bit more information. Right now, we're continuing to go to the downside. If, however, I do see some institutional activity coming in here and I do want to get along either the future or buy a call, we could insulate and preserve this profit that we have in place by either protecting the position to go up to 98, or it could in a very reasonable way go back up here to 1702 and then look for a formation that could take us back down. So under any of those scenarios, we have something in place here. We just need to see a little bit more development. We could either buy a call in here to get long and preserve this move to the upside, preserve these profits from a move to the upside, or get long the future itself and basically create a hedge. But these are the things that we discuss in real time, and in a situation like this, I would send out a tweet with a picture that says that, okay, if this area is taken out to the upside, then we're going to do one of two possible hedging answers to preserve this profit that we have in place here so far. And so this is a way in which you can use options to participate and basically be on both sides. Because if this thing should get some news here, and we're waiting on some news today, that's going to bust it to the upside, well, then we'd be in a position to profit from that. But so far today, we have a trade on that gives us the opportunity to finance our participation in either direction that this thing may go. So far, we just continue to start working downward. But we always want to be prepared and have a plan in place in real time that enables us to react very quickly.